Hi, everyone. Hope you're having a good holiday season and enjoying some time with friends and family. It looks like my Christmas present for the account this week was a slightly green chart. And when we're talking about investing, green beats red every time. Stay tuned and I'll tell you about my dividends this week and how my ultra high yield ETFs performed. I'm hunting for an infinite stream of dividend income, and my plan is to turn $1,000 of Robinhood's money into $1,000 of my money. So far, it's not going great, but I'm keeping you updated as we go. An important reminder is that you need to do your own research for your investments. I'm just sharing with you what I'm doing with my investments, and this is not financial or investing advice. Let's start off with dividends this week. Nivy paid me 34.7 cents per share, which is about a 97% annualized yield, but that total dropped down to only $3.92. And so far during this experiment, Nivy has paid me just over $100 in dividends. I split the dividend and invested half back into Nivy and the other half back into SPY. Koi paid almost an exact identical amount as Nivy, 0.34749 cents versus Nivy's 0.34748 cents. But the important difference is because Koi's share value has dropped so much that only totals $1.73 and represents about an 83% annualized yield. 87 cents of that dividend went back into Koi, and I was able to add it to the 90 cents left over from last week, since I'm not able to invest amounts under $1. And that gives me $61.50 of total dividends so far this year. Now we can slide over to Who and see that it paid me almost 56 cents per share, totaling $1.20. Annualized, this is about a 56% return rate. 60 cents was combined with some of the other dividends and reinvested into SPY. The other 60 cents has to wait until next week when I get that dividend. Then I can combine them and hopefully have more than $1 to invest. And so far this year, the combined Who and Misty dividends have paid me $62.48. Snowy normally pays out on Friday evenings, and I guess because of the holidays last week, that's been pushed off till next week. I still have 89 cents from the previous week that needs to be combined with the next dividend to reinvest back into Snowy. So next week's video should have 2 Snowy dividends. I also received PAAA's monthly dividend this past week at just under 21 cents per share. That $9.46 gets reinvested back into PAAA. I also received my SPY monthly dividend at 53 cents per share. The entire $1.48 will be reinvested back into SPY, and that should take place on Monday. So for the week, the account was up just a hair, 0.12%. I'm above the 5% threshold for high risk, so I'm happily sitting at the green low risk margin status. I still have a couple of pending orders and some leftovers from last week, so I haven't been able to top off my full $1,000 of margin used, but I should be able to top that off this week. Here's a look at the weekly returns, and I threw QQQ in there just for context. That index was up about 0.75%. Snowy was down a little over 1%. HOOW was down over 4%. COIW was down over 5%. And Nivy was down about 0.4%. The 2 Roundhill funds have really had a hard time with share price recently. And I know a lot of that is simply based on the volatility of the underlying stock. Just as an example, here is Koi compared to its underlying coin. This is total return. And because this is a leveraged ETF, COIW has underperformed coin by around the 20% that we would expect. If we take a look at the share price, you can see why the total return is so nasty. The share price of coin alone is down 41% based off the date of my original purchase of these shares. And Koi's share price is down a whopping 65%. Here's my purchase log of Koi, starting with my initial buy and every dividend reinvestment. As you can see, I bought in at a high of around $59.48. Then all of my reinvestments have been very small amounts, but you can see in column F how the cost per share is just dropping dramatically. Within a few weeks, we're in the $40. Then we dip down into $30. And now, as of December 24th, when I reinvested my dividends, the cost per share was at $21.65. Unfortunately, my average cost per share is only down to $55.53. Now, in theory, If coin, the underlying stock, has a dramatic turnaround and starts gaining price, the Roundhill COIW fund should be able to take advantage of that and hopefully regain a lot of this share price. But that's only if coin turns around. So here's a summary of my total return. My 4 high yield ETFs are down a combined about 35%. That's offset by the value of my SPY-I position for a combined portfolio total of negative 19.95%. NIVI and SNOI within the last couple of weeks were in the green, and they're both down about 13 or 14%, despite some recent market rallies. We'll see how things finish up at the end of the year, and in January, I guess I'll need to reevaluate where I want to go with this, and maybe even start thinking about at what point do I turn this experiment off, or do I just let it play out? I hope you're enjoying these videos as I document my experience. And if you found it helpful or entertaining, or even a little bit interesting, I'd appreciate it if you'd hit the like button and subscribe for future updates. And of course, none of this is financial, legal, or tax advice. I'm just inviting you along my journey. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. Good luck hunting those infinite dividends. Take care.